Well, let's put that to our next guest, an investor, philanthropist, and financial literacy advocate. Welcome in John Hope Bryant, founder, chairman, and CEO of Operation Hope. Thank you so much for joining me today. I mean, I suppose we just need to start there with what we're seeing in crypto. Can you help us understand exactly what is going on right now? And, you know, a lot of analysts have been drawing this connection, this correlation with this sort of risk on and risk off that we've seen in tech. Can you spell it out for us right now?
You're talking about cryptocurrency?
Yes.
Yeah, look, it's speculation. I mean, I don't. We can dress this up. You can do all you want, but it's speculation. It's not it's not digital money. Digital money has a present value. If I have a dollar that I earned and I put a dollar in the bank, then I can access that dollar through digital money. So it has the same value as natural currency. But cryptocurrency is a detached value. It is a speculative value based on basically market demand. I mean, it's like you and I go to a gym. We love that gym. My God, that gym is so popular. Everybody's going to that gym, getting the gym membership. Well, as soon as everybody goes away from that gym, finds another gym or another club, the gym membership dies. The value goes away. It's not even worth the cost of the equipment anymore. And I'm not saying that's a direct analogy, but I am saying that without government regulation and without guardrails, you're going to have very, very high highs and very, very low lows. And until it's attached to an asset or something that has finite value, then really it's just based on speculation and demand. And I'm not telling people not to do it, by the way. My wife has some crypto, right? But she's got me. If everything goes sideways, she still has me. What I tell people is don't bet your rent money. That's all I say to people. Particularly if you don't have high levels of financial literacy. And a lot of people, crypto was created in the backdrop of the 2008 economic crisis, where people really felt unsure about traditional markets and Wall Street and not connected to Main Street. And so they created this out of that euphoria. Anything done emotionally typically is not the best decision. And I think this is an emotional currency. It's an emotional engagement in the economic system. You can win big, you can lose big, as we're seeing in the markets. And it's great if you bought at 70 and it's gone up to 95. It's pretty bad if you bought at 110 is now 85, and that was everything. So if you have 10%, 5% of your investment portfolio that is dedicated to speculation, there are, by the way, safe bets within this space, safer bets like blockchain technology itself, I think is brilliant. There are aspects of this that's going to be really quite incredible, but I would only bet that 5 or 10% on speculation, whether it's this or Las Vegas or gaming or some flyer startup stock that is now available that you're not quite so sure of. I probably over-answered your question.
Yeah, I mean, I just want to sort of stick on this because it's been such a topic of conversation today, and I know that you have a lot of thoughts on that. I mean, as you mentioned, speculators looking to take risk off the table. That certainly has been something that we've seen. I mean, there's been a lot of talk today about margin calling, selling stocks to cover crypto losses. But can you just sort of help our viewers sort of understand what we're seeing here as a whole? Because, I mean, Bitcoin has come off about 30% since the highs we saw in October. In a year where we have seen so much tailwind in this space, a more sort of crypto-friendly White House, more sort of institutional corporate adoption, more mainstream adoption. We've had even legislative wins for the space, and yet it's still coming off. Can you explain the sort of moves we're seeing and the importance to the market right now?
I think it is not so much about everything you just said. I think what's America? She's not a country; she's an idea, right? What's the markets? What are they based on increasingly? Sentiment, right? What's going public? It's a narrative, right? Everything has a flow. You go far enough from the North Pole, you'll end up south. And I think what you're feeling indirectly is a sense that people go, this market is really sort of very warm. It's hot. It's not frothy, but my God, it's doing so well. The overall market. Is it doing too well? Is it time for a correction? Maybe I should find, you have interest rates that are up. You have cost of living that's up. You have equities that are up. I mean, by the way, some of this is feeling like during the times of COVID, by the way. And if you have, is there a sense there's going to be a reset? And if there's going to be a reset, and then the AI, which is real, by the way, but not all players in AI are going to be winners. So when does that fall out, and what falls out and where? I think that sophisticated investors are saying, let me find a safe place to sit here. let me go and hide in safe places, the sort of the structural foundations of the economy. And if you are unfortunately financially illiterate, and a lot of people who don't have a lot in the market invested a lot in crypto, that is a literal fact. And as you know, there were thousands of cryptocurrencies created, and thousands, most of those failed or inactive. You really talk about a very small band of cryptocurrencies that are legitimate and have market activity. And by the way, I commend them, generally speaking. I think they are trying to do things the right way. But you have an environment where if everybody's hyping it up, actually you sort of want to be, you don't want to belong to a club that actually would have you as a member, sort of a thing. If all the folks who sort of should be mature and sort of thoughtful and level-headed are hyping it up, it might be good reason, if it doesn't have an asset attached to it, to go sit down for a moment and let this thing calm down. I think the overall economy, you got Wall Street is sort of disconnected a little bit from Main Street. You call it a K economy. Some people call it a K-shaped economy. It's making people nervous.
Yeah, it certainly is. And we talk about it often here, certainly on the network. What is your sort of broader take, just outside of crypto, on the market environment right now? I mean, it seemed like today Jensen Huang gave us an opportunity to perhaps put some of the AI valuations and circularity concerns to the side a bit, but then they sort of seem to resurface, sort of suggesting that, there's an underlying theme here. People are worried about an AI bubble. We even had Ray Dalio out today talking about it himself. What's your take on all of this?
I'm a believer in artificial intelligence, whether I like it or not. It's here, and I think you embrace things like this. You don't run away from them. And Warren Buffett has famously said, when folks are afraid, be greedy. When people are greedy, be afraid. I think that answered your first question about when people feel like the market's greedy or people are greedy, and even leaders seem to be that way, be afraid. But when people are afraid, well, my God, that's a market opportunity. Typically when values have dipped, you buy that dip of real things and real values. I think that folks are trying to figure out what that is. I believe in artificial intelligence. I believe in this economy. We're the biggest in the world. I believe it is a solid economy. I do believe it's a little heated. I do believe it's a little over warm in certain areas. This is no different, by the way, than 1850 to 1910, where you went from the from horse and buggy to the automobile in 1900, 1910. Everything was horse and buggy, 1850, 60, 70, 90, 10% of all jobs were farriers. People did shoe horns, replaced the shoe horns on shoes. By 1910, the value of a horse, the use of a horse was something else, tied to glue. There's no knock on horses. We're at this moment again where we're going from human-centric, labor-centric economy, or even making money on money versus making money on labor. But from that to really technology-centric economy, but very much like this era from horse and buggy to the automobile, no one knows what that future looks like yet. And there's going to be a job dip before there's a job growth on the back end of this, but no one's planning for the point in between. That the political uncertainty, the economic uncertainty, the labor to technology uncertainty, the market uncertainty, what's real and what's not, and what will fall out, and something is going to fall out, is making people who are mature or conservative or a little paranoid push back from the table a bit and just say, let this all settle down a minute. There are opportunities in here, but you've got to be really smart about them. I tell people just to do the stuff that seems obvious to. What do you wear every day? What do you shop every day? Like, what are things that you know you're going to need all the time, whether the market's up or down? Invest in that. That's what we tell folks at Operation Hope, which I founded.
You know, everybody's been drawing comparisons to the dot-com bubble, but you just went way, way back more in history, so maybe we should be focusing on that. But yeah, you're right. You raise an interesting point around the paradigm shift. Certainly that is a good opportunity to look at as far as some of these suggestions that you made. John Hope Bryant, always really nice to pick your brains about things. Thank you so much for joining us here, founder and chairman, CEO, Operation Hope.